Welcome to Profiletraders. This is Reza and thank you for listening to my market analysis for August the 10th. First of all, let me welcome you back as my listeners. I was gone for 2 weeks, but now back and business as usual. So while I was gone, what we saw was about Thursday of last week, a very nasty drop after we consolidated a bunch up there and was unable to push further on the upside. And then as we dropped, we started to find support exactly where support was, which on the daily was anywhere between 2065 to 2060, exactly from the last time the buyer showed up. And the reason for the bounce today was a mixture of a little bit of euphoria caused by Mr. Buffett announcing a buyout of another company for $33 billion. Also the result of a potential and a possible another Greek deal being announced tomorrow, and third, by the prospect of a Chinese stimulus package that would be introduced any given day to revive their falling and crashing economy. So a combination of all these made the market very, very euphoric today, and no doubt that it was extremely powerful because it did not even manage to close any of the gap to the upside that we witnessed upon the open. And this gap up was nothing to joke about, because if you would have taken the bottom down there 2062 to the location of where we opened today and you calculate the difference, this was at the time something like 28-30 points rally already. So you had to have a lot of confidence to having been able to chase the market on the back of such a gap. So what I tried to do was to put an order to buy at 2083 and then 2080, hoping that we would at least come retest the high here, but I was left completely out of the game. And then as market behaved very, very stubborn on the upside, we did not find any shorting opportunity for the balance of the day. So now what I'm looking for tomorrow is that if by any chance there is a substantial gap to the upside, I will potentially be very interested to shorting into it just to capitalize on a possible initial retracement into the gap. And keep also in mind that there will be tons and tons of news, Greek, China, etc., etc., etc. So first level of support right now 2093.5. Second level of support 2090. We break below 2090, the game is over. I strongly believe we are going to go delete all the A's here and then possibly target the POC below at 2080. And on the upside 2112 to 2115 is extreme severe resistance, considering the fact that once we would reach up there, we already have had traveled a whole bunch of distance, and that level should provide exhaustion rather than a successful break to the upside. Now for crude, after having been murdered, raped, destroyed, beat up, stamped on, you name it, finally we got a little bit of a dead cat bounce that took place today. Now, has it done anything phenomenal? Nothing at all. After a 11 points drop, pretty straightforward, you are entitled to such profit taking and short covering from the part of institutions, and when they do that, then you will get a combination of short covering and also oversold buying kicking together in the market, and then it could create moves like today. So can it go higher from here? No question. When you drop from $64 to $44, 20 points drop almost straight, yes, you can definitely bounce, and you can possibly bounce all the way to $47 from here. So now your critical level of support remains at 44.35. As long as we remain above that, potential for higher prices are no question there. In order to clear the first level of substantial resistance here, we need to trade through 45.25. If we do that, we should then seek ourselves a clear path, possibly to 45.75. Now, as far as gold, a long time ago I told you, if we do some projections on the daily chart, if we would take the length of this leg down and we would project it on this leg down, we would reach termination of this down move anywhere between 1080 to 1075. Right now it is a very clear indicator that we have found a very strong short-term support. If we look at the volume down there, there is severe and solid and clear demand and appetite in terms of volume for this up move in gold. And to be honest with you, I believe the fact that the Federal Reserve is now forced, literally forced by the market to increase rates, because nobody is anymore willing to finance our junk debt at 0% interest rate. And as you become a low credit borrower, when you borrow, rates go up, rates don't go down on you. And any fool and any dummy that will come out and say that the Federal Reserve is doing this because things are too good, I am sorry, but that person would have a serious understanding of what is taking place. If you borrow a bunch of debt, trust me that you would be happy to be able to borrow it at 0% rather than jacking up the rates on yourself. And if this is happening, it is because there is a borrowing problem now. And all the debt that you see come out on these auctions, and the auctions go well, and they tell you that there was an appetite for treasury buying, the main and the biggest buyer of US Treasury is the Federal Reserve itself. So the Treasury issues and the Fed buys. And this is the Ponzi that has been going on. But I'm believing that we have now reached a level of printing that we can no longer continue the pace to buy our own debt. And since we are the biggest customer of our own debt, we don't buy it, then it's left for foreigners to buy it. And trust me that it is not the Chinese, nor the Japanese, nor the Russians, nor the Arab countries that are willing to give us money for free. So if you want their money, you need to jack up rates. Then what you do, you start to tumble down a whole consumer economy that is based on 0% financing. And once that collapses, pretty much the whole economy collapses. So I am a worried person about what is it under the radar that is forcing the Fed to increase rates. And they are telling us the big old BS that they are doing it because the job market has improved with this phony, fraudulent 5.2% or 3%. That is nothing but a dream fantasy. Because You cannot have this kind of a healthy job market and have 100 million people out of a population of 340 million out of the job market and then say that your job market is so strong that now you're going to take rates higher. In any case, all I'm saying is that something really smells bad, and one must be very careful by watching when the Fed will be forced to jack up rates, because I think at that point the start of a very vicious and a dangerous cycle of credit crunch may have started. Like always, thank you for listening and welcome back. This is Reza with Profiletraders.com.